Hello everyone, this is my latest market review on what I believe is happening in the state of Victoria and very generally across the other states. We know that Western Australia and South Australia are doing extremely well. We know that the uptake of land purchases in both those states is at one of their highest levels ever. We know that new home construction is doing really well in relation to building orders. As far as Sydney and Queensland go, we know that in Queensland there's been a little bit of a tapering off, but land sales are still acutely pretty good. The new home building orders are doing well. In New South Wales, there has been a tapering off in the land sale area, and new home construction has dropped a little bit, but still reasonably solid. What we know in Victoria is we know that auction sales rates at the moment are down at 58%, which is pretty low for here as of last weekend. We know that land sales are at one of their lowest points ever. And this was a trend that seems to happen every decade or so here. And some of it is due to economic downturn and some of it is due to supply. And even though they say that there is a shortage of supply, at the moment in quite a few regional areas and in some inner suburban or outer CBD areas of Melbourne, there is still a bit of land supply in relation to old dwellings and also just vacant land. So, and I'm talking about knockdowns with old dwellings. So what does that mean? That means at the moment there is a shortage of supply. With the current migration intake that we still currently have, the optimistic view, which I think is probably reasonably realistic from the economists, is that the market will have a little bit of an uplift in the last quarter of this year with pent-up demand that is currently off the boil right now. What that means in English is that people have tapered off looking. The weather's been particularly bad, and not that that's a big governor when people want to buy, but it does have a slight effect. And the availability of good quality stock hasn't been around that much. And people are still considering that some stock is overpriced or expensive. So what I believe will happen is some of that property that is borderline expensive for the buying market is generally due to credit and the availability of finance from the bank that's actually pulled back the amount that the buyer can spend, but aspirationally the buyer hasn't changed their view on what they want. So there's a disparity in that regard. What does that mean moving forward? I believe that means, as I briefly said before, the last quarter of this year I think will be good. I think that the RBA currently will not increase interest rates, even though the CPI has gone up a little bit. I believe that when they look at the inflation rates, that they take a lot of factors into account, and you talk about petrol, gas, electricity, all those factors come into account. And depending on what the variable is, and the consistent things are things like gas, power, mortgages, etc., those sort of costs generally affect the outcome of which way I think the Reserve Bank will go. So I think currently that they'll probably stay status quo till the end of the year. And I do think that we're going to see a drop in interest rates in the first and second quarter of next year. Maybe not much, but just enough to give the market a little bit of confidence. So overall, the investment opportunities are at the moment here in Melbourne not bad, but the actual home buying opportunities I believe are quite good. So the home market, the unit market and the apartment market for brand new completed product is quite rare. There's not a lot of really good stock around that's less than 5 years old. When it does come up or it has been renovated, it sells very quickly. So in moving forward, if you find something you love, you buy it. And if you don't, you won't.